Last week, the government announced its finances were in better shape than forecast, and it immediately prompted more debate about whether tax cuts are affordable or not. Well, to talk about that, I'm joined by National's finance spokesperson, Nicola Willis.
Good morning.
Morning. So you've said you'll proceed with tax cuts. Would you do that even if you were still facing deficits?
Well, we think we'll be able to fund tax reduction by bringing more discipline to existing government spending, stopping some large, poor priority projects and cutting out waste and bureaucracy. And that's what gives us confidence that we can fund tax reduction. The context here is that this government has increased spending by a whopping $1 billion every week on top of what National was spending in government. And it's our view that despite that great spending, we're not seeing the results. So we want to bring much more of a focus back to targets, accountability, driving value from the government purse.
But is that still, though, based on the books being in surplus? Because while these accounts for the last financial year were better than forecast, still a $9.7 billion deficit that you have to pull back.
That's right, and forecast to get back into surplus in the future. Our commitment to adjust tax brackets is one for the first term of government, as are our other commitments to reverse tax reduction. So we'll have a look at the books next year, and we will have the up-to-date accounts at that point. We'll make an assessment about what prudent reductions and wasteful spending we can make over the forecast period, and then we'll make sure that we put together a fiscal plan that both tracks New Zealand towards balanced books, ensures that we have a pathway of paying off debt, and make sure that we deliver tax reduction to hardworking Kiwis.
So those tax reductions might not happen until, say, the third year of the term rather than the first year, depending on how the numbers look.
I've consistently said that we will set out our fiscal plan with our annual commitments based on the economic and fiscal conditions that we inherit. But what gives me confidence about how we can deliver tax reduction is, as I say, the extraordinary amount of spending that is already happening. Spending is up 70% since Labor came to office. That is a huge amount of money washing around the system. It absolutely shadows over the size of the tax reduction package that we are talking about. It makes our tax reduction look minuscule in comparison. So we're confident that when we rake through those books, when we rake through that spending, we'll be able to release some value.
And do you think, the savings would be it? Because it seems to me a lot of the extra spending came about as part of the COVID response. Now the COVID response is basically easing right back. Presumably there should be money easily found by not spending on COVID support packages.
Yeah, although the heightened levels of spending are continuing over the forecast period, although there was a lot of spending during COVID, we haven't seen the kind of comeback down that some might have expected. But yes, some items will finish with COVID. Other things are ongoing, whether it's the merger of Television New Zealand and Radio New Zealand, which comes with a hefty $300 million plus price tag, whether it's the $3 billion that the government have attached to developing its Three Waters model with the 4 mega entities, whether it's the $200 million that's been attached to the, I would have thought, simple task of writing a light rail business case. Wherever we look, we see a lot of spending going into projects that New Zealanders, in the midst of a cost of living crisis, would not want prioritised.
But I'm wondering how much of the money that you would say, for instance, the RNZ, TVNZ merger, a lot of that money is actually for the operating cost of that entity. So if the merger doesn't proceed, there still has to be money to run RNZ and TVNZ. And I guess Three Waters, you'd still expect, wouldn't you, that the government's going to have to front up with a bit of money to actually improve infrastructure, whether it's through the model that this government's put forward or whether it's through a model that a national-led government would put forward.
Well, taking each of those in turn, in terms of the RNZ-TVNZ merger, we see a solution looking for a problem. So we don't see why there needs to be this step change in funding for those entities, given they by and large do a good job now. And we certainly haven't seen a public rallying cry to increase their funding dramatically or change their structure. On Three Waters, what we've seen with the money that's been allocated is a heck of a lot of it is going towards new administrative systems, the actual merger itself, the consultants needed to advise on that. And we've been clear, We oppose the idea of 4 mega entities with all of the bureaucracy and difficult governance that brings, and we're confident that we can develop a better model that has local communities owning their assets, having their voices heard, and yes, they will need some new financing tools, but we don't think we'll be throwing as much money at trying to make a bad solution work.
Last week you said the government was awash with cash. Isn't that a reflection actually that the economy's doing better than we expected?
Well, we have an economy that has extremely high inflation. At 7.3%, it's the highest in 32 years. Prices are rising faster than wages. So if you're Grant Robertson, you might say, oh, the economy's doing well because I'm getting more money into my coffers. But if you are a New Zealander right now, the economy is not going well because you often will be falling backwards each week. And so we judge the economy by the financial well-being and strength of New Zealanders, and we think many of them will look at the government right now doing a huge amount of spending, taking in a lot of revenue because of inflation, and they would say, well, it's actually time for the government to show some discipline.
But for instance, corporate tax was up $4 billion, and I think the Treasury estimated that was on the basis of a 13% increase in profitability.
That's right. And so this is why, again, we say tax cuts can be paid for. Tax reduction, inflation adjusting those tax thresholds to allow for the fact that New Zealanders have been pushed into higher tax brackets because their nominal wages are increasing, but their real purchasing power isn't. The tax department is taking in more revenue at a time when New Zealanders really need that cash to meet their own household bills.
Is the tax thresholds increase, is that the priority and ahead of the scrapping the 39% rate, or do they go together?
National's made a commitment that adjusting the tax thresholds for inflation is our priority. Beyond that, we've committed to reversing 7 of Labor's new taxes, which includes the 39-cent rate.
And what do you think that will do in terms of both the impact on the books, but also the longer term, I guess, impact on economic activity?
Well, in terms of the inflation adjustment of the tax thresholds, we're looking at a fiscal cost of $1.7 billion, which pales in comparison to the additional spending that's occurring. As I said earlier, the government's spending $1 billion more each week on top of what it was spending when National was in office. So we think that that's affordable. And in terms of the rest of the tax package, once you take that all together, that's another $1.3 billion. So when we look at stepping that out over the period, we think the economic effect of that will be that New Zealanders in their own households and own homes will feel more able to meet their costs. When we look at the issue of restoring interest deductibility for landlords, we think that that will help put downward pressure on rents. Landlords tell us, tenants tell us, rents have gone up dramatically since those tax changes were made, and we want to do what we can to take that pressure off.
Nicola Willis, thank you for your time.